Most people think of the US tax system as this one giant complicated machine. But what if I told you there's a completely parallel system with its own set of rules, its own logic, and its own crucial form? Today, we're decoding Form 1040-NR, and in doing that, we're going to unlock the entire architecture of the US tax system for non-residents. Okay, so let's just dive right in. The first question seems simple, but everything hinges on it. If you're earning money from US sources, but you don't have US citizenship or a green card, then this whole explainer, it's built specifically for you. And that's really the key here. We're not just learning how to fill out a form today. We're going to get to the bottom of the fundamental logic, the why behind this system and how it all works. Because once you get that, the form itself becomes way clearer. So here's our game plan. First, we'll nail down who you are in the eyes of the IRS. Then we'll get into the main event, the two different ways your income is categorized. After that, we'll see how the tax return actually comes together, touch on that tricky dual status year, and then we'll wrap up by demystifying the key forms you're going to see.
First things first, before we can even talk about how you're taxed, the IRS needs to know your status. And look, this has nothing to do with your immigration status. This is a very specific tax definition that determines every single rule that's about to apply to you.
So the term you gotta know is non-resident alien. It's a precise tax status. If you're not a citizen and you don't have a green card, your status boils down to one thing, a math formula called the substantial presence test. And just look at how this works. The IRS isn't asking how you feel or where your family is. Nope, it's just math. It's a strict weighted calculation. If you were here for at least 31 days this year, you then plug your days into this formula. If that number hits 183 or more, you're generally considered a US resident for tax purposes. But, and this is a big but, there's a critical exception. And here's where it gets really interesting. Even if the math says you're a resident, you can actually override it with something called the closer connection exception. If you spent less than 183 days here this year, and you can prove your real tax home is in another country, you can file a Form 8840 and keep your non-resident status. It's this crucial escape hatch that, honestly, a lot of people just don't know about. Okay, so you figured out your identity. Now what? Well, the next piece of the puzzle is your income. This next part, this is the absolute core of the entire non-resident tax system. Everything flows from how your US income gets split up. See, for a non-resident, the IRS sees your US income in only two ways. That's it. First, there's effectively connected income, or ECI. Just think of this as your active income. You're working for it in the US, like a salary. The second is not effectively connected, also called FDAP. Think of this as passive income. Your money is working for you, earning things like US stock dividends. And this table, this is basically the whole ballgame right here. This is the direct cause and effect. If your income is ECI, that active income, you get taxed at the same graduated rates as a US citizen, and this is huge, you get to take deductions. But if it's not effectively connected, you get hit with a flat 30% tax on the gross amount, with zero deductions. Getting this one distinction right, that's literally everything.
All right, so we've got your status and we've got the two kinds of income. Now we can see how Form 1040-NR is just a tool built to report those two things. The form's entire structure is a direct reflection of that logic.
But wait, before we go any further, you actually have to unlearn a few things. If you're used to the regular Form 1040 for residents, you have to know what you can't do. You generally can't file jointly, you can't take the standard deduction, and a lot of common credits are just off limits. Trust me, these are the kinds of mistakes that can really cost you. Okay, and here is a massive compliance trap you need to know about. If the IRS says you're engaged in a US trade or business, you have to file a tax return, period. It doesn't matter if you made zero money or even had a loss. You still have to file, and not filing can get you into some serious hot water.
So what about those tricky years?
The year you either arrive in the US or the year you leave. You might find yourself being a non-resident for part of the year and a resident for the other part. This is what's known as a dual status year. And yeah, it has its own unique and very complex set of rules.
So basically, a dual status taxpayer is someone who's living in both tax worlds in the same year. Your tax return for that year has to treat those two parts of the year completely differently. You're applying non-resident rules for one period and resident rules for the other, all squished into one very complicated tax return. And whoa, the restrictions here are huge. Just like a full year non-resident, a dual status filer can't take the standard deduction. You're also blocked from filing a joint return, unless you make this special and, believe me, it's complicated, election to be treated as a resident for the whole year. It's a real minefield of exceptions. All right, last section. Let's talk about the actual paperwork. Your 1040 NR doesn't show up to the party alone. It brings friends, schedules, and other forms. And once you understand what each piece of the machine does, the whole thing feels a lot less scary. Okay, first up, Schedule OI. The easiest way to think about this is like your tax passport. This is where you officially tell the IRS, here's my country of residence, here's my citizenship, and here's why I'm filing this specific return. It's the foundation holding up your whole 1040 NR. Hey, remember those two worlds of income we talked about? Well, Schedule NEC is the dedicated home for that second world, your not effectively connected income. All your US dividends, some interest, royalties, it all gets listed here, and that flat 30% or treaty-based tax is calculated right on this page. Now, this next form is all about being proactive. The W-8 bin isn't actually part of your tax return. Think of it as a preventative tool. You give this to your US bank or broker before they pay you. It's you telling them, hey, I'm a foreign person, so please withhold tax at the correct rate, which could be anything from 30% down to 0, depending on tax treaties. This little form can stop a huge tax headache before it even begins. Okay, wow, we've covered a ton of ground, from identity tests to income types and all those different forms. So if we boil all of this down to the one single thing you absolutely have to remember, what is it? Look, the whole system, every single rule, every line on every form, it all comes down to just two questions. One, who are you to the IRS, a resident or non-resident? And two, what's the source and type of your US income? Is it effectively connected or not? The answers to those two questions drive everything else. That's it. So now you've got the mental model, right? You get the logic behind this parallel tax system. The goal is never to memorize every rule, it's to understand the framework. So the real question now is for you. When you look at a payment you got from the US, are you asking the right questions about that money? What's its type? What's its source? And how does it fit into the picture we just laid out?